is now with the central office, and they expect approval of the plan that they showed you, which I couldn't see on half of the slides, by the way. Yes.
County exec, I was wondering if you knew what the county has spent to preserve open space green land in the last, say, 5 years.
I don't know about 5 years, but over the last, sort of the last 10, we've spent over $10 million. And that was part of the referendum from the, supported by referendum from the citizens.
Sir?
Yes, thank you. I, for one, my wife has told me that I have to support the Costco store. And I like the cost savings, and they're a good employer. I think that's well recognized. But I have some problems with using tax dollars to help finance this project. I think that that area in western Lehigh County is going to develop regardless of what happens to this project. It will happen soon. It's happening right now. It's a place where everybody's going to want to put these stores. If the property was so damaged by the previous mining activities and it's going to cost all this extra money, why didn't you negotiate down the price even more than it was so that it fully covered those costs, rather than making the taxpayers pay for it? Because we're going to pay not $7, but $14 million in lost tax revenues. A project like this, well, this project may be built, or a project like it will be built. The tax revenue will occur, and we could get all that tax revenue for the county. There's no doubt in my mind that stores, major stores, and developers are not going to leave the western part of Lehigh County, rapidly growing, high-income area, without stores. So why not negotiate down the price? You could do that quickly. If the seller really thinks that he wants to sell or they want to sell, negotiate the price down and let the land pay for the damages that occurred to the land.
It's a fair question, and I respect the question. I kind of wish you were negotiating for me. You might have been able to do a better job. I can tell you that we did our best. Landowner, there has to be a meeting of the minds between a willing buyer and a willing seller. The landowner doesn't have to sell and reach the point.
Then why should thus the county pay for that, in a sense?
I don't think the county is paying for it. Look, again, I respect your point of view. Let me put it this way. I have a feeling I'm not going to change your mind. Let me give you a countervailing point of view. Not in the hopes that I'll change your mind, but I do believe that there's a countervailing point of view. Here it is. When we went through what we tried to show you is there's a lot of money that needs to be spent to bring the site up to where a greenfield site would be. And that's what the TIF proceeds are going to be used for. Actually, they're not used for all of it. They're used for $7 million. $7 million to 28. And that $7 million is less than the $10 million that has to be dealt with just to deal with the road problems and the drainage problems. It has nothing to do with the geotechnical or mining tailing problems on the site, because we're not allowed to spend the money on that. We have to spend the money on public infrastructure. So that's what we're doing. That's what the TIF is for. It's 10%, a little more than 10.6% of our total project budget. And it helps bring the site to a point where it's developed like a greenfield site.
I would just reiterate, none of the TIF proceeds, if it's approved as the TIF plan has been drafted, would go towards the mine plan.
Yeah,
That's a
we can't.
change that was made to the TIF plan. Those funds can only go towards the other infrastructure costs that we showed you. So it would certainly be our other argument that those costs that are inherently there that were defects before this project's ever been considered. I mean, if you think about it, PennDOT put this bypass in place, and they took right-of-way throughout the entire route of the roadway. It's our understanding, this is before our time, but it's our understanding that they found you can't condemn cemetery property. So when they got to the property that was in question, they weren't able to condemn it because it was used for cemetery. So there was a meeting of the minds. The township, PennDOT, and the township, PennDOT, the land seller, agreed they would get the right of way they need to build a road, but at the same time, the property could be zoned for commercial, and the seller would be able to achieve value because their huge 100-acre parcel was essentially being trisected with the bypass going through one route and crossroad going through the other. So the value of the property would be significantly diminished, and they wanted to recapture it by selling it for commercial use. This is exactly what's happening. You fast forward, the road got built, the property got bisected, the property got rezoned, the developer came to develop it, and it turns out the road's over capacity. The road was designed, and it was supposed to work for 20 years, and after 7 years, it's already beyond capacity. So our project's being asked to bear the cost to upgrade that roadway, when you would think the people at the time would have had the foresight to anticipate this particular site being developed for commercial use. We don't know the circumstances as to why it didn't. We believe it's simply that they run out of money. But the fact is, this project's being asked to bear that cost, and it simply can't.
There's another, it's okay if I just take on one more part of your question? The other part, you were saying is, well, these new stores, they'll go somewhere else, that if you lower the country such an attractive market, they'll land somewhere. That's probably true with some of them, but with the big anchor stores that are doing so few locations today, like Target and Costco, it's probably not the case. These are stores that have hundreds of opportunities all over the country, and they picked this site because of the exceptional retail potential of the site. There is no site that they found that has that potential, except for this one. There's a Home Depot that was already approved that's sitting there. It was never built. Believe me, Home Depot would love for them to take that site. They don't want that site, even though it's maybe a mile away, because it doesn't have the attributes that this site has. Yes, sir?
Seems to me that the fixed point in this, you've been saying the project can't afford. There is no such thing as a project that can or can't afford. You're the investors in it. You can or can't afford. So you're leaving your rate of return as a fixed point and saying everybody else has to move around. What do you say to that? You've already explained that you somewhat got taken by the land seller, that you weren't able to negotiate the kind of price that you should, and the banks are saying this, that, and the other to you. Why don't you adjust your own profitability estimates going forward and make that be the additional means of financing that you need?
Our internal rate of return is anything but fixed and has moved consistently down over time for this project. The fact of the matter is that we've done, I think, exceedingly well with the landowner, and we've gotten them to make a sizable reduction. We've gotten other sorts of reductions along the way, concessions the best we can. And what you have is an economic model where the costs to build it versus the cost on the income side just are out of balance. So we wouldn't be able to finance a project whether we were willing to accept a 0% rate of return. We're at a point in this project where it just simply doesn't work.
So the $7 million is the difference between break-even and failure?
$7 million represents the difference between when we can finance it and when we can't.
Yeah,
Between what you can.
Whether we can finance it or whether we can't finance it. We are not financing this project with all cash. We're not coming up with $66 million of equity. We will go to a construction lender who will borrow funds. And there's a market for those things, and there's lenders who have an appropriate rate of return that they have, and there's underwriting criteria that they look at to make sure that the project's financeable and financially sound. And this project borders on that to the point where they wouldn't finance it otherwise.
in other words, there are minimum rate of return criteria that the lenders impose on us, even if we were economically irrational, and said, you know what, we don't want a project, we'll just do it. The lender wouldn't lend us the money. This is what he would say. The project has to pencil because if something happens to you and we take it over, we got to know we have our debt service covered. We have to know that we can get our money back. It's not up to us. Now, the truth is, we're developing, both of us, and we talk about this all the time. Like, we have to have our heads in it. Our rate of return for this is lower than any of the 30 projects that we've done. But we've sunk so much into it. It's really hard now for us to walk away. And we've got our reputations on the line. Let me put it one other way. I can see your life. One of the slides I showed you talked about $28 million in extraordinary costs. That, most of it dealing with problems that exist today, not right. Okay? If you really think about it, if we wanted the landowner to bear those costs so that they were doing their fair share, not being unjustly enriched, the land itself was paying for the costs that kind of come with land, we have to pay the landowner $10 million. I mean, they have to pay for everything. They have to pay me $10 million. take the project off their hands. It's not going to happen. So I guess what we're asking is maybe come at it from a different angle. How much tax does the property generate today? $50,000. How much is it going to generate if we can get this done?
Will it do that regardless of whether there's a TIF?
Yes.
Okay.
Well, but it needs a TIF to get off the ground.
Get you out.
No, to get
the project
you
out.
know, it's not about us. It's about the land and making the land develop. Okay? Let's agree to disagree, I guess. Yes.
I, based on your presentation, got to change what I was planning on saying a little bit, but I still a strong believer that TIF, it's like park money that was given to the banks on a federal level and only on a local level. And I am totally against it. That being said, we're in the 6th fastest growing economy in the country. I find it hard to believe that there's not any funds to be found another way to make this project happen. The other thing I don't think people that have been involved with the TIF, unfortunately the public has not, is the fact that there's a lot of, 20 years is a long time. I've been in this community for 20 years and I've seen all this growth. A lot can happen in 20 years. You just told us today, Target built 10 stores but lost 12. What happens in 20 years if we lose the store? What happens if there's another store built down between here and Reading and we lose sales and Target goes back to the county and says, we want to reassess it? Or the Target that's over on the other side of the county says, we want to reassess it. Or the stores over here say, we're losing business, we want to reassess it. The tax dollars, the school district thinks is there, is not there. I see the school district losing $600,000. That's a lot of money. Superintendent said that last night when we were talking about the budget. A lot of money. I think there's a lot in question here, and I don't think we should be ready to jump. Just my opinion.
I would address one part of what you said. You said a bunch of different things, but most particularly the concept of what happens if the store closes. The way the TIF is structured is that there is no risk to the public and there's no risk to any of the taxing bodies. The TIF, if it's granted, would be either funded by bonds or loans that the project would borrow. So the people that would invest in those bonds or loan those funds, the bank, would be taking the risk that the TIF would be satisfied by the tax revenue that comes from it. So if in the 3rd year or any year of this TIF, in the 20-year term, all the stores closed, first of all, it's based on real estate taxes, so it's assessed on the value. So Target cannot operate the store. They're still going to be assessed a tax on the value of that building and the value of that land, and they'll still have to pay the taxes.
But they
So the
apply
entire
for you, they have an opportunity once a year to apply for reassessment.
actually don't, because the TIF actually has restrictions in it that other normal taxpayers don't. The TIF requires that everybody who's in the TIF district waives their right to appeal their real estate taxes below the number that would default the TIF bonds.
So every one of the stores that are in that anchor.
There will be 3 owners the way we've structured this project. The owners will be Costco, Target, and the balance of the property owned by our firms. So all of us will have to agree and have it run with the land should it ever be sold, that you will waive your right to appeal your taxes below that number. So you're not allowed to appeal your taxes below a number that would make the TIF default. Number one, let me finish this. Number two, a store like Target may close their store, but they're still paying the real estate taxes. The company would have to go out of business to not have to pay the real estate taxes. It's the lien against the property. So that's number two. So if Target, as a store, goes out of business and more of a percentage of the entire shopping center goes out of business, obviously that would be problematic. And the people that are going to finance the TIF through either loans or bonds are taking the risk that that won't happen. And it's not a risk that's being borne by any of the residents of Lehigh County. It's not a risk that's being borne by the municipalities or any of the taxing bodies. It's a risk that's solely being borne by the people who are going to be willing to finance the TIF loans, which is why the interest rates have gone up as TIF.
And your firm is the third party that's in control and become responsible for the taxes as well?
Yes.
We an owner.
What just to stop you is what happened with the economy theft. For you to claim Chapter 11 and reopen it under another name, you lose that responsibility.
Because the TIF runs with the land. So if we sold it or went out of business, the restriction on appealing the taxes runs with the land. So anybody who would buy that, if we went out of business and the value dropped and the bank bought it, they'd be restricted from appealing the real estate taxes until the TIF term expires.
Ken?
I'd like to add, it's not just appealing taxes below what would be required to pay off the debt. It's appealing below the number that
That's in
justifies the
the
project. So the full $1.4 million of annual taxes is guaranteed the assessment to support that. We got that language in there.
And I guess, could I just take on one other part of your question?
Sure, absolutely.
Where you analogize the TARP money, the difference between this and other grant programs or other loan programs is this is an investment of tax money that doesn't exist today. That's the key thing. So it's not like the county is getting this money today. It's not going to get this money unless the project's built. And the project can't be built unless the problems are dealt with that are too big for the project to handle on its own. So the county is investing for every dollar of new taxes every dollar of new taxes it invests, it gets $1.11 of new taxes that it's not getting today. That's like buying $1 of stock and getting a dividend of $1.11 every year. That's a great investment.
Well,
TARP didn't
that's how you
do
look
that.
at it, I guess. There's a different frame of mind. So I do have another question. Your presentation, is that going to be made publicly available?
Yes, I think the county executive said it would be put on the county website.
Sorry.
Mike?
I have no problem with the TIF. It's misconception number 13, was shown to be untrue. Misconception number 13, which I was hoping maybe you would address, has to do with the quality of this project. You say you call this project a town center project, but when I look at the plans, it doesn't appear to be a quality project. It doesn't appear like as if it's going to have any kind of quality landscaping, as if it's going to have any kind of quality architecture. It looks to me like it's going to be really nothing more than just a large, typical, run-of-the-mill shopping center.
Okay,
Is that misconception true, or is that misconception?
I believe it's a misconception, so let me just show you, to repeat, and invite everybody. Thanks for coming. I'm not going to talk too much, just scroll through the images. Does this look like a conventional shopping center?
No, that looks pretty good.
That's our center.
I was wondering what the rest of it's going to look like.
No, these are snapshots of the different portions of the shopping center. This is interspersed off.
That's an actual rendering of the elevation that you will see when we make the
Can you tell me where that, on that plan, where is that?
Yeah, I got it.
That view that you saw would be if you're standing right here and you're looking right here. This door right here, on the end is a restaurant with an outdoor seating area. That is an exact view based on civilly engineered drawings of someone standing right here in the Crocs Road intersection, looking this way. You go back to the image.
Other way.
This is Crocs Road back here in the foreground, and you're looking at the side of that building. This is the outdoor gathering area. Those are the exact trees that are on our landscaping plan.
Yeah, that looks very nice right there. I'm just wondering what the rest of the project is going to look like.
Rest of the
If you
project-
go to the first slide.
Okay, let me just say this. It's not like we're taking one corner of the project to make it look nice, and 99% of it's going to look terrible. We try to give you a bunch of images from all over the place in this project that represent what it's going to look like.
This is Crocs Road, heading south, coming from the bypass towards Hamilton Boulevard, looking east towards that same area where there's gathering area that you can't see from this view because it's further advanced. And it's showing you the tree colonnade and the landscaping in the foreground that will be between Crocs Road and buildings. There was a huge effort from the township's perspective to make sure that there were trees, landscapings, walls, etc., trying to block the view of people who aren't necessarily going to the shopping center from the shopping center. Or, for example, I guess we never got that one out across the picture. For cars that are in a parking lot, trying to shield the view of their headlights from people that are maybe on a bike or pedestrians. So that type of view is throughout the entire shopping center. And in fact, I forget the number of plants you see, but
I don't want to say it's embarrassingly high.
it's probably 3 to 4 times the amount of landscaping that we've ever seen in a shopping center that we've developed, because that was the most important thing locally. And it's frankly a relatively inexpensive way to add a lasting traffic.
It just didn't seem like it was a true town center. When I think of the town center, I think of a place where you can drive there and park your car. From that vantage point, you should be able to go out and visit and see most of the project. And it seems to me, if you park over at the Costco or over at Target, you're pretty far away from the other side. It just doesn't look like there's, and I haven't seen the detailed plan, so I don't know what kind of walking paths you have proposed.
Well, we certainly look to show a lot of them tonight. This is a view. You look aerially from Crossroads, look in the other direction. So now you're looking at Target, this is Dick's, and you're looking this way. So another restaurant, a lot of attention paid to outdoor seating areas. The sidewalk in front of the certain stores is probably some 50 feet deep, so that we can have not just 6 feet where you're walking going to a store, but landscaping and seating areas and benches and things like that, all throughout the shopping center. There's attention paid to bus stops and how your pedestrians will be able to go from public transportation into the stores. There's a lot of attention paid to those aspects. So I would encourage you, the township has all of our plans on file, and I believe we would be able to convince you certainly that this, again, when you say town center, I think what Tim was trying to differentiate is the size of the stores. When you think of the promenade, which is truly a town center or a lifestyle center, the stores are much smaller, the parking fields are much smaller, and people can park and walk. The parking required for the stores, the magnitude we're talking about here, it's a much larger puzzle piece, if you will. So what we did was have the challenge of trying to blend the reality of having to have loading and parking and access to a big store like a Target with the pedestrian size aspect of having walkability. So it was certainly a challenge, and it's not going to be exactly fitting into the box that you're thinking in the town center, but we think we've achieved a nice balance where you have the aesthetics, the walkability, and accommodating the needs of a big store like Target.
I'm going to apologize. I'm going to cut off the questions here. These guys are going to obviously keep on going forever.
Oh, Mr. Muller, I had my hand up before anybody had this whole night.
Go ahead.
And this probably pertains more to you as far as just the whole operation of the TIF. Now, it was turned down at the county level, bipartisan supermajority. So I take it now that the TIF is dead. If you want anything else, you must resurrect it and go through the whole process with each of the 3 entities again.
No, it's not correct.
Why wouldn't that be?
It's just not correct. We've checked the legal standard, but it is fine set right now as far as the East Penn School District. It is unapproved right now as far as the county. We're going to, if the interest is there, and we sense the interest there, I'm going to take it back to our commissioners at either probably early next month.
It's a whole new board, it's a new election, everybody's new. And that, as you presented it now, has been turned down. You needed the 3 to vote yes, 1 voted, again, bipartisan supermajority, no. So if you want to do it again, I would think legally you would have to go and start all over.
Happy to talk to you offline, but no, we do not.
Oh, that's pretty interesting, very interesting.
I don't mean to shut anybody down on questions, please. They'll be here, and as you can tell, they'll love to talk about this